Today, we're breaking down one of the most talked about, most analyzed, and, let's be honest, most owned stocks in the entire world, Apple.
To really get a sense of just how massive Apple is, let's start with this number, $1 trillion. That's the historic market cap milestone Apple first smashed back in 2018, becoming the very first US company to ever do so. A figure like that, well, it speaks volumes about its sheer size and influence.
Okay, here's how we're going to tackle this. First, we'll look at Apple as this huge financial giant. Then, we'll decode what actually makes its stock price tick. We'll get into that big question, is it overvalued? After that, we'll weigh the future risks and rewards. And finally, we'll map out a potential investing blueprint.
So, let's jump right in. When we talk about Apple stock, what are we really talking about? It's so much more than the gadget in your pocket. It's a piece of a global financial powerhouse. Simply put, owning a share of AAPL means you own a tiny, tiny piece of Apple Inc. And that means you own a piece of everything, from its colossal iPhone sales to its super profitable services like iCloud, all the way to its cutting-edge, futuristic stuff like the Vision Pro. You get a slice of the entire pie.
So why does that price swing up and down every single day? It's not random, not at all. There are actually four key forces constantly pushing and pulling on its value.
Yeah, it really boils down to these four things. First, you've got Apple's own performance. A blockbuster iPhone launch can send the stock soaring. Then there's just market sentiment. How are investors feeling? Because Apple is so widely held, general investor fear or optimism can hit it hard. The global economy is also huge, especially for a company with a supply chain that spans the entire planet. And of course, you can't forget the competition. Rivals like Samsung and Microsoft are always looking to take a piece of the action. And wow, this timeline really shows the incredible journey. I mean, think about it. From a pretty humble IPO way back in 1980 to a genuine world-changing catalyst with the iPhone launch in 2007. And from there, you just see these massive financial milestones like becoming the first US company to hit that trillion-dollar valuation.
This whole journey brings us to the big question, right? For any potential investor, whether you're a beginner or a seasoned pro, is the stock actually worth its current price? How can we tell if it's a bargain or maybe a little overpriced?
Well, investors don't just guess. They use specific tools. They're called valuation metrics to get a more objective answer. This lets them cut through all the media hype and the daily headlines and just look at the hard data.
The most common metric, the one you'll hear about all the time, is the P/E ratio. The easiest way to think of it is this. It tells you how much you're willing to pay for one single dollar of Apple's earnings. A higher P/E usually means investors are expecting some serious growth in the future.
Now, this is where it gets really interesting. Look at how Apple stacks up against its tech peers. If you look at the P/E ratio, 35 is kind of right in the middle, not as high as Amazon's, a bit lower than Microsoft's. This is what analysts would call a balanced valuation. It's neither the cheapest nor the most expensive in its class.
But here's the crucial point. While Apple is balanced among its direct rivals, its P/E of 35 is still significantly higher than the broader market average of 25. So what does that tell us? It says that investors are willing to pay a premium for Apple, likely because of its stability, its insane brand power, and its consistent growth potential.
Knowing its current value is one thing, but investing is all about the future. So what's next? Let's look at the powerful forces that could shape Apple's next chapter, both the good and the bad.
And it's really a classic balancing act. On one hand, you've got huge potential from game-changing innovations like augmented reality, a services division that just prints money, and massive expansion into new markets. But the risks are just as real. A single supply chain snag can delay a product launch. Regulators worldwide are scrutinizing its app store, and the core smartphone market is getting pretty crowded. The future really depends on which side of this scale tips heavier.
So, with all this information, what are the practical steps if you're actually considering an investment? We've covered what Apple stock is, what moves it, how it's valued, and its future outlook. Now let's get to the how.
Getting started is surprisingly straightforward. It's basically a 5-step process. You choose a brokerage, fund your account, and set a budget that's right for you. After you place the order, the real work begins, monitoring your investment and staying informed.
And as you begin, please keep these crucial tips in mind. Diversify, so your entire portfolio doesn't ride on one company's fate. Consider dollar-cost averaging, which just means investing a set amount regularly to smooth out the market's bumps. Stay informed. And finally, think about reinvesting dividends. It's such a powerful way to let your investment compound over time.
Ultimately, when you zoom out, the story of Apple stock is one of this unique and powerful blend. It combines the forward-looking excitement of a tech innovator with the financial stability and strength of a global giant.
In the end, analyzing Apple isn't just about the numbers. It's about understanding the story of a company caught between relentless innovation and fortress-like stability. So the question to ask yourself isn't just, should I invest? But rather, when it comes to your money, which of those two powerful forces do you value most?